Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 27th Commitments of Traders Report of 2025, and as we always do, we shall start out by looking at the largest changes in commercials net positions. But before I jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBase.com, you'll find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well that can guide you through the analysis process step by step. Of course, if you have any specific questions, feel free to comment underneath the video or send us an email to info@cotbase.com. So as you can see, we have the markets ordered based on the largest change in commercials net positions. We are, of course, talking about the COT data, and it breaks down open interest in the classic COT report type into three trader categories. We've got commercials, who are of course in the business of that underlying commodity. Either they're producers or they're big consumers of that commodity. We've got large speculators, of course, as their name suggests, they're mainly in the markets for speculation purposes. And then we've got retail investors, non-reportables, as CFTC calls them, but we like to call them simply small speculators. We are analyzing the futures and options data combined. So of course, there's two formats in which CFTC publishes this data. One is the futures only. Doesn't really take into consideration the entire options market, but then there's the one that has options in it. And at COTBase, we actually subtracted futures data from the futures and options to arrive at a unique options only data type as well. There's a bunch of data sets to analyze, but in these reviews, we focus on the net position. So let's get started. We're going to start with gasoline. Soybeans complex. Whenever you see complex, that's something unique. We combined the individual markets within that category and come up with a complex COT data. But gasoline is going to be the first market we talk about. Here we have a 12% change in commercials net position. You can see this recent change size at the end of the chart over here. Commercials, of course, represented in red. We've got large speculators in green. If you compare this recent change in their net positions, it's definitely larger than average, but I wouldn't consider this to be such a big signal because there are similar changes quite frequently in this past 52 weeks time horizon or 1 year. But it does suggest the movement that we've been witnessing the past few days, so it supports further increase in the price. If we move to a 5 years chart, we get a chance to examine stress levels. Now, if we take this horizontal line over here and put it to the end of our red line, commercials net position, then you can see where it stands historically, at least on this 5 years chart, and it's leaning towards the bullish side of the market, suggesting that we may see higher prices coming in the medium to long-term future. But neither of these signals are very strong for us to act upon, I would say. Moving on to a different market, a soft sugar, and of course back to the 1 year chart to see this 11% change in commercials net position. This 11%, if you look at the chart, is actually larger, I'd say, comparatively to the past 1 year. Than in the case of the gasoline that we just saw. So just if you look at the past couple of weeks, there are changes, but maybe this one is a bit more sizable. It is a bullish change signal suggesting sugar could increase the next couple of days. Moving to a 5 years chart, you can see that there is a significant extreme present in the market, not only in commercials net position, 293 report extreme. So that simply means that it took the market or traders 293 reports, and since a report comes out every week, you can basically translate that to 293 weeks. That's roughly, I'd say 6 years ago, since commercials were so net long in the market. And of course, the same applies to large speculators, 291 report extreme in their net position. So pretty decent size bullish extreme, suggesting that sugar may actually be bottoming in the next couple of weeks and month ahead of us. Soybeans is our next market, the same percentage change in commercial's net position. However, here this is, I'd say, closer to what we saw in gasoline, maybe a bit larger than average, but nothing huge. COT Extreme wise, again, basically both commercials and large speculators hovering around the net zero line. You can see on this 5 years chart the two extremes, the most bearish extremes from 2020 and the most bullish extremes recently from a year ago. And right now the current net position is kind of in between. So once again, we can conclude that there's not much going on in the COT report for soybeans. Now I'm going to take a pause here. First of all, ask you to like the video if you like it, and also consider subscribing to our YouTube channel so that you get notified if we come out with new videos. I'm going to jump over here for a second to showcase our unique indicator, the iCOT Intraday Indicator. This is based on everything we learned in Commitments of Traders analysis. We basically did a lot of research and developed an indicator that mimics those tools. This is soybean, but as you can see, these are not daily candles. This is actually an hourly chart, and you can see how well the this so-called iCOT scores line, which is kind of like the COT index, commercials and large speculators net positions, and it really shows the extremes at lows or highs. So I think it can be very well used in one's trading system. If you'd like to know more about this, then please visit us at COTBase.com, and under indicators you'll find a lot of material on our different kinds of indicators. We've got the Pro. This focuses on the classic COT report, and then we have the iCOT, so I standing for intraday COT indicator, something quite unique. If you have not yet tried using it, then please give it a chance. I would say it's quite useful. Moving on to large speculators COT Extreme analysis, we've got soybean meal on top of our list with an all-time COT Extreme, not only in large speculators, but that's the case for commercial. So all-time means the entire history of COT data. We're talking about futures and options combined. We've never seen commercials at such levels. So they're at roughly 80,000 contracts net long, and large speculators about 100,000 contracts net short. So huge extreme. And you can go back in time and see how the market reacted to these great bullish COT extremes. You can see basically almost every example that I'm just showing to you were successful tips on catching a bottom. So the only thing one should be cautious about is that these bullish extremes could easily be present in a market for weeks, month even, before the market actually reacts. So it's kind of just a very early warning that something is changing. You may want to start positioning yourself accordingly. We talked about sugar, so we're going to jump over that and talk a little bit about coffee. Here we have an 85 report extreme. You can see that there's been quite a bit of a bearish COT extreme going on for quite some time before the market actually reached its top, and as it's coming down, you can see traders reacting to it. Now one might ask, have we reached a bullish extreme? Now, relatively speaking, if one would be looking at let's say a 2 years time horizon, maybe not even on a 2 years, on a 1 year time horizon, definitely you can consider that. But again, with COT extremes, I would advise looking at least at a 5 years horizon. You can see there's definitely space left to reach much greater extremes before we would call that a clearly bullish COT extreme that could influence the market. The last market for this review is the New Zealand dollar. Here we have a 48 report extreme in large speculators. So, it hasn't been that long, about a year since we've seen large speculators at these levels. It is, of course, a bearish COT extreme. We've seen greater bearish extremes in the past, okay? Nevertheless, it's there. It may grow to greater levels before we reach a top in the New Zealand dollar, but it's there. It's good to know what traders are doing. And the last major extreme was this bullish over here at these lows. It was a successful signal pushing the market higher, and we're just witnessing COT Extreme signal, a successful one back from early this year, taking its effect and pushing the market higher. That is going to be all for this review. Of course, there's a lot to do here at COTBase.com. If you have any questions, once again, feel free to comment underneath the video or send us an email to info@COTBase.com. Thank you for your attention. I wish you guys a wonderful week ahead, and I hope to see you in my next COT review. Take care. Goodbye.